Step one, wake up early, gonna rise with the sun. Step two, get some good, some food in you. Step three, think real hard about what you wanna be. Step four, everybody just do your thing.
Wake up, today's gonna be a good day. 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 Wake up, today's gonna be a good day.
Good morning, good morning. Welcome to Good Morning Crypto, where we turn your early hours in the morning into your edge and financial freedom. Today, we're going to talk a little bit about future rate cuts that'll be heading our way. I've got an article pulled up about where we might end up on this cut cycle. So, could be extremely bullish for crypto. We'll just have to dive on in and get you prepped for success today so that we can get on over to that. Let me pull up my screen. I've got the stock heat map pulled up. Yesterday was a little bit of a mixed bag, but overall, for most sectors, we saw movement to the upside. We've got Apple sitting down 0.76%, Nvidia's up 0.22%. We've got Berkshire Hathaway down 0.07%. We've got Amazon up 1.19%. We've got Walmart up 1.61% and Costco up 1.11%. We've got ExxonMobil up 1.81%. Tesla sitting up 4.93%. We've got Visa up 1.36%. We've got Eli Lilly sitting down 0.32%, and Microsoft sitting down 0.4%, Google sitting down 1.06%, and Meta is up 0.55%. On the crypto side of things, we've got Bitcoin up 0.5%, Ethereum is up 0.11%, we've got BNB sitting down 0.11%, Solana's up 1.44%, XRP's up 0.79%. We've got Dogecoin up 0.58%. We've got Toncoin down 0.89%. We've got Cardano up 1.7%. We've got Tron down 0.13% and Avalanche up 0.77%. On the economic calendar today, we do have the housing price index for the USA that's coming out at 8 o'clock my time. We do have the housing prices month over month and year over year today as well. We've got consumer confidence coming out later in the morning. That will be a medium-sized market mover and is looking to be pretty much neutral, just up a tiny bit. We will see if that hits the mark. You know, a lot of people aren't feeling as good about the economy as the numbers might indicate. So something to keep your eye on. We do have API crude oil stock change coming out this afternoon at market close. So that's another thing to watch. It is predicted to be down 1.1 million. So could be a bit of a market mover as we're seeing places like Canada who are in a surplus of oil and finally bringing down their oil costs and other energy costs as well, because oil is your biggest producer of energy across the world. Let me hop over to the fear and greeds. On the stock market side of things, we do have it sitting 65 in slight greed after a slight move up. For crypto, we are still sitting in neutral at 54. It is up 4 points though. So we'll see how that plays out for the morning. For the liquidation heat map, we do have some liquidity piling up underneath us and above us. Above us is sitting at 63,959 to 64, and then below us sitting at 62,659. So liquidity on both sides, could see a grab go either way. There is some mixed signals on some of the charts for different time frames, so could easily grab both of those. Let me hop over to Bitcoin and pull that up. So as you can see on a 4-hour chart, we're starting to get a little bit of curvature on your prime oscillator. Your MACD is setting up for a coming up towards your prime line, where you're starting to finally see some curvature and some lightening on the red on your oscillator down here. You still do have inflows sitting on the green, so something nice to keep your eye on is a might see that liquidity grab later in the day on the top side. If you drop it down to a shorter time frame, though, you do have a reversal signal on your 1-hour chart. Your inflows are still looking pretty green, though, as well as the MACD is still pointed to the upside. So that's why it's looking a little bit mixed if you drop it down to a 15, where you can kind of see your MACD is pointing down. You are getting some curvature on your prime oscillator after a reversal signal and some overbought signals, but your inflows are kind of pointing to the downside. It looks like David is sliding on in here for the morning. Good morning, sir.
Good morning.
Good morning. The
Good
people
morning.
can hear you.
Yay. Let's go. Good morning. Hello,
Good.
everybody. Let's get to work.
Oh
We
yeah.
missed the show yesterday. We got to go.
Oh yeah. I was not feeling amazing, but I'm feeling much better today. So I've just been going over Bitcoin. I went over the 4-hour, the 1-hour, and the 15-minute now. So I can either toss that over to you so people can see your little Bitcoin rundown, or I can hop into a news article, whichever works better for you.
Do news.
Do news? All right. Let me get my screen shared with you, and then I will hop over to this article real quick. So, we did have Fed's Goldby wants more rate cuts. The economy could nail a soft landing. Interest rates need to keep coming down for the economy to nail a soft landing. Chicago Fed President Austin Goolsbee told state treasurers on Monday. Inflation has come down significantly. The labor market is trending weaker, yet rates remain the highest they've been in 20 years, even after the central bank lowered its target rate by 0.5 point last week. Goolsbee, who has led Chicago Federal Reserve Bank since January of 23, will have a vote on the Fed policy-making body next year. What I've seen in the last 2 years is that inflation has come way down without there being a recession, which has never happened before in the U.S. or virtually anywhere in the world, Goolsbee told an audience at the National Association of State Treasurers annual conference in Chicago. Now the unemployment rate has inched up slowly to a level of 4.2% that a lot of people think is basically stable full employment. That's where you want it to stop, he said. Goolsbee added that monthly inflation readings were at pace consistent with the Fed's 2% annual target if they continue for a year. Real-time indicators of economic activity point to solid gross domestic product growth for the third quarter. The overall economy has some warning signs, but it's got some real strengths, he said. If you could freeze it in its place right now, exactly where it is, you would like to. The Chicago Fed president touched on last Wednesday's decision by the Federal Open Market Committee. The FOMC voted to lower its target for the federal funds rate by half a point to a range of 4.75 to 5%, after holding its rate steady since July of 2023. Does it make sense to still have the interest rate be at 20-year highs, way above where anybody thinks is neutral? Goolsbee said, referring to the level of interest rates that neither stimulate nor restrict economic growth. No, you'd be nervous that if rates are this high, we're not going to stay at the freeze frame moment for that long. For Goolsbee, the debate over whether the Fed could cut by a quarter point or a half point at this or that meeting is less important than the ultimate destination for the interest rates, which is something I've definitely talked about. And that means several more interest rate cuts over the coming year or so, approaching the neutral rate. The median forecast in the FOMC's September economic projections implied a percentage point of rate cuts this year, followed by another point by the end of next year, which could bring the target to a range of 3.25 to 3.5.
Breathe.
I had to sneeze. I did. I managed to not sneeze directly into the mic for the people. So, boom, got that one. But that's
Boom,
something.
roasted.
Yeah. The 3.25 to 3.5 was something I had talked about earlier, because 3.25 to 3.5 really signals a risk-on environment, which would be extremely bullish for crypto going into 2025, where if we do see another rate cut, which, you know, a 50-point rate cut, like I had said before, would not be extremely bullish for the job numbers, which is the whole reason that they even decided to do such a large rate cut, because that initial cut is not going to fix anything but your producers' profits. So that's why you would end up seeing another rate cut, and most likely a smaller rate cut coming into the end of the year. So it's just something to keep in mind, that there might not come a whole lot better time to buy on a HODL bag than the next few weeks or so, as we might see some lower prices, and could be the last chance you really see before we hit another bear market. So
I agree.
Yep, I've got a little bit of dry powder that is set to the side, and I've been trading my way into some more dry powder just for this exact situation. I wanted to see kind of what people's sentiment was on the markets, and they are, as Piper said on his show, kind of pricing in another 50-point cut. I don't know if it's going to be that large. I think that could be kind of extreme, where a full point by December is a good standing point for the future. Whereas you wouldn't have to cut that hard going into next year. You just do rate cut, rate cut, rate cut, rate cut if you're already down a full percent. That landing on the higher side at 3.5 instead of the lower side at 3.25. So I don't know if you have any thoughts on that.
Yeah, I don't know. Cutting, that'll spur economic growth, which then ends up increasing inflation. I just feel like we're in a death spiral. But we've done it before.
Hmm.
Yeah, we've tamed inflation before. So, but we did it pretty dramatically too. And we also had gold to kind of help us out. But we have the next best thing, which is digital gold. And yeah, I don't know. I think it's it's hard to say that yay, they did the soft landing um when things are at all-time highs like the S&P. It's kind of like is it going to crash any moment now? 'Cause the S&P is it's getting up there, and it's at levels where, it's kind of like right before the Great Depression type of levels. We can get into that, but yeah, I don't know. Maybe the Fed did its job. Maybe they didn't. I don't know. We'll see. Only time will tell. We only got one rate cut. Getting more by the end of the year. I think I'd probably lean with you. I think it says I read something last night saying that the market was pricing in 3 more rate cuts by the end of the year. I was like, well, there's only 2 more FOMCs. So, and they said of 75 points, and I was like, oh, so like another 50 and then a 25, or a 25 and then a 50, something like that. And I was like, probably not. We might get 50 more points for the rest of the year and just do a full point for this year. So, or a full 100 for this year. So, I don't know.
See, and I think that would be probably the one thing that might actually pick up the job numbers is getting to a full percent. You're going to see the biggest part in the time of year that they're cutting is going to be those seasonal jobs. Whereas in you can't really fix the job numbers when you're going to see an influx of seasonal jobs coming in there. People will pick up some jobs for the season, but you're also losing a giant sector of jobs in construction and things like that, where if you can't, you'll see in the northern half of the US where people like me, we can't operate heavy machinery in snow. Your farmers are also out of a job for the season. So those job numbers will tick up a bit, but what they're trying to do is keep it at that 4.2%. And the only way to really do that is to give the producer some more breath so that they could actually hire someone.
Yeah. Yeah. No. 100%. Nailed it. Nailed it.
Do you want to hop over to the Bitcoin chart for the people? I know you probably got a better rundown than I do.
I mean, we can. Let me pull something up real quick.
If you got something else pulled up for the people, I'm pretty sure they'd like to see just about any chart because sometimes news can get a little boring. While you pull that up, I'd like to say good morning to the chat. We've got Kyle Fields in there, Randy Abite, and Darren Does Things. So good morning, and thank you for showing up to our first show of the week since we were both a little behind yesterday, me being sick, and
Randy Abid.
that's
how I say that.
I always hope that I'm saying it right.
That one I'm kind of like until I get corrected.
Yeah.
I don't know. All right, guys. Let's see. Are we over on me?
Yep.
All right. All right. So first things first, I did want to go over some stuff that I found interesting that I was looking at last night. Minimize you real quick. All right. This is Bitcoin for the last month, and this is the average return by hour. I did the UTC math for you, so you don't have to. 10, 11, and 12 p.m. Eastern Standard Time tend to be the most profitable hours for the past month for Bitcoin, with the early morning hours being the least profitable. So just something to think about. I don't know. I just found that interesting. If we go ahead and zoom out and then come back over here, this is by the day. Now, this is something that I really like because this shows what days have been the most profitable for Bitcoin for the past month. It has been Mondays. Tuesdays have been down days. Today's Tuesday. Wednesdays have been up days. Thursdays and Fridays have all been up days, even though Friday's been a little bit, just barely even made it. And then the weekends have been pretty bad, especially Sundays. Weekdays have definitely outperformed weekends. Let's go over to the yearly. And so let's see. So for the past year, Monday's been the best day. Had a big pump yesterday, but that was more like Sunday, but it was technically Monday. Tuesday was a down day. Wednesday, the rest of the time, it's always it's green for the past year. So the point in me showing you this is if you were to have gone long every single day and just set a stop loss, you would mostly only lose on Tuesdays. So you might even get just a little bit. I mean, but you got to close by the end of the day. Just so you know, you got to close by the end of the day, or you get wrecked. But this is risk management right here, and it's just go long, buy Bitcoin is what this is saying to me. This is the all-time chart. All-time Mondays and Wednesdays are the best days for Bitcoin, and Fridays, we'll call it. We'll say it's okay, and then Sundays. With Tuesdays, Thursdays being the worst days of all time for Bitcoin, and Saturdays. So Tuesday, Thursday, Saturday, no trade day, or go short, one of the two. But this is the all-time for Bitcoin. I found that pretty interesting, and this is why we say down day, because Tuesday typically is, by the odds, a down day. All right, now let's get over to the beautiful chart skis. Let's get over to the forecast chart. And we've been watching this one for a couple of weeks now. And we finally made it to our top to see what we're going to do up here. Now if you look at the structure, this has been the plan for a while, for a couple of weeks. Consolidation. Excuse me. Consolidation at the range highs with a break up to induce liquidity, and then we start breaking down. Now the question is, have we finished the break up, or do we have a little more? There's a little more to go. We also have a point of interest up here at 66.8 that I'm watching as well. It's just a high over here that digs into this order block over here. So I don't know that we'll get up that high. We do have right above us. Also, why I have that as a level is the previous month high. We are in September, so August high. The August high right here. So I was expecting for us to come up and at least sweep that high. Definitely sweep these equal highs over here and then roll over. But we might have already, maybe possibly already put in the high here. We did get the consolidation with the break above. It kind of had a big push down, not really as big as I would have wanted. And we did create some equal lows down here. So let's go over to the Binance chart so we can see what I'm looking at. There we go. So we've got these lows, take away spaceman. There we go. All right. These equal lows right here, we know that there's going to be what down here? Stops. We know that there are stops down here because price held up, and this is where people would put their stop losses, and same for right here. So we've got to be cautious that this isn't an ABC, and that's the start of the correction to the downside. But we could see something like this where we just get a sweep real quick, come up to my target that I am looking for, and then rolling over. We can definitely see that as well. Also, but we can also see if it's able to kind of stay up here and then start putting in some impulsive moves to the upside, then I would consider that we could be moving on. The bottom could be in, and we could be moving on towards all-time high. I don't know that we are quite there yet. I'm still kind of bearish until one, my forecast gets invalidated, which would be a consolidation above these highs here, or until after the United States presidential election, just because it's going to get a little crazy in the coming weeks leading up to that. September's almost done. Let's go to the monthly chart. Take a look. I'm going to have to go to a different chart. Let's go to a Coinbase chart. Let's go to the monthly chart. I'm a little all over the place, I just realized, but that's okay. All right, this white line is your 50-week moving average, I believe. Yep. And the other one is your 200. This is, 200 day, 200 day. All right, so I did 200 day. 200 day for both of these. The blue one being the EMA, the white one being the SMA, simple moving average. So versus exponential moving average. Go to the, I was on the monthly, dang it. All right, so the monthly is actually looking pretty good. It's actually looking pretty good. We came down to the midpoint to sweep the midpoint of the August monthly candle, and it is looking kind of like it is wanting to expand higher. Now, one thing that I will note is that if we go over to the Russell 2000 is we are getting a bounce off of that 200-day SMA and EMA, and we just need to see some expansion here, man. If we can just get some expansion here in the Russell, that'll really signal a risk on environment. So that's what we need to do, but we do need to get through that 200 SMA. I heard them talking about that on Piper Academy yesterday. I'm going to go ahead and change this to a 50-week SMA, and let's see what we're looking at on that. We are above the 50-week SMA. So the last time that we broke the 50-week SMA, we were heading into the last run up. That could very well be the case here. If we go back to the previous bull run, we can see the first time we broke it, we barely came up, and then we had a flush down. But I don't know that we're going to get that flush down because it's almost like we've already had it. So we could be working on our way on sending our way up higher. Or so I don't know. But I think I still want to see another move down, but I don't know that we will get it because the charts are looking not so bad, but we are at the range highs on the lower time frames, and that's the only thing that's got me going or giving me pause. So we just gotta be cautious and cautiously optimistic. But right now we're at that 200-day SMA, and it continues to act as resistance. We need to get above that, close above it, and then we will feel good. BC, what do we have on today's economic calendar?
Some housing data for the U.S. and crude oil stock change. So,
What time?
Housing data is going to be this morning, and we have crude oil is always at market close.
What is this morning, sir? Is there a time?
Uh, let's see. It was 8 o'clock my time. So right at
Okay.
that market open.
8 o'clock. Okay. Okay. All right. So 9 o'clock Eastern. I'll be watching these charts for sure. Yeah, that's what I'll be looking for today is a sweep. Sweep of these lows right here. Get a push below those. Get this drawn back up. Actually, I have it on over here. Zoom in. Zoom out. There we go. Yeah, these lows over here. So we've got these relatively equal lows. We are sitting at the quantum reactor and just above the dynamic reactor on the 15 minutes. So if this can get a bouncing up, it's already starting to fall through. But I would expect these lows to get swept over here before we make a move back to the highs. But we're breaking through that quantum reactor right now as we speak. Another thing, just real quick on the daily, we do have that the quantum reactor sitting up here basically at my target that I've been looking at. So that would act as resistance coming up to it. So just something that we need to be paying attention to. We also put in what is called a peak seeker on the Oscillator Pro Plus by Chart Prime. Shout out to Chart Prime. The last time we got a peak seeker over here, it peaked out this or seeked out this peak up here, and then we had this big dump. Okay, so let's just be careful because we are getting that peak seeker again, and with the reversal signal as well. So but on the good side, our money flow is curving up to the upside with our True 7 already in the green, and our Trend Fusion is above the 0 line. So we could see a small pullback and then get that push up and then get that bounce off of that quantum reactor or rejection. And then from there is when we would see, what are we going to do? Are we going to break down, or are we going to consolidate and then break up? That's going to be the big one. So that's what I'm looking for on Bitcoin. Throwing it back to you, BC.
All right. Well, I have the 3-month bond pulled up. This is the daily chart. So as you can see on the Prime Oscillator, you're finally seeing some signs that we might be reversing on that. So reversing on that could be a sign that we are starting to head towards a more risk-on environment, that people have a little more sentiment in their minds that the short term would be better suited in less safety. Whereas you can kind of see the 1 year is still sitting there. But if you start dropping this down to like your 4-hour time frame, you can already see that your MACD has crossed. You are seeing a nice push up on your Prime Oscillator where we got a reversal signal as well. There is divergences. So could be a nice...
Hey, question.
Yeah.
Question. You didn't change the thumbnail?
I believe I changed the thumbnail.
Look at my screen.
I can't
Why
see your
isn't that
screen.
showing me? That's weird. Oh, it's because we're on the stream.
Probably. But
Anyway, we've got Piper and Tradefly and OC guy on our thumbnail. That's okay. I'll go in there and fix it. You continue.
it can be changed in posts.
I
Doing
can do it right
great.
now, but you go ahead.
Awesome. Well, as I was saying on the 4 hour, you're finally seeing your MACD start crossing. So this is a signal that you might be seeing a little bit of sell-off coming to the bonds and people putting their money in more risk on assets. Things like the Russell, because these are going to be more TradFi people, and maybe seeing some inflows into things like the Bitcoin ETF if they are pricing in a 50-point cut, because that would be extremely bullish of a signal on your risk on assets. As LBC went over earlier, the Russell is now coming to ranges where we might see new all-time highs. You do have this, what was it? On an extension, this is the 386, I believe. Yep, the 386 sitting right below us. So kind of primed for a little bounce range to make some higher highs for a change. If you pull up to the monthly chart, we are not incredibly far off from creating all-time highs. The 50 is sitting right above us at 2,379. So if you continue this uptrend, it is a nice sign for how risk on people are going to be. It's just something I've been keeping my eye on because bonds will signal a nice risk on or risk off. As you can see, when we were sitting at flat rates for the past year and a half, we saw a tick up, meaning people were selling off and putting their money in stocks and more risky assets. And as we've seen the rate cut, people have been buying the bonds up because they want to see where things are kind of heading. There is on a monthly some more buying up of bonds that could happen, but when you drop it down, you are starting to see people be a little more sure. Like on a weekly, it looks like we're probably going to see a double bottom on that. There is some curvature to the downside on the MACD, but with that double bottom, and if it's a higher low, then it could be a nice little divergence and seeing some movement to the upside on that, which means that people are selling off their bonds because they want to park their money in something that's going to be better for them in the short term. I don't know if you had another asset that you wanted to go over BC or LBC, but I would ask that
Did
if
you just almost call yourself yourself?
yeah, yep,
Did you almost call me yourself you?
yep.
Am
We're
I
the
you?
same person. We are the same peoples.
We the same.
But if anyone had any assets they wanted us to look at, now would be the time to throw that in the chat. I've got
Cool.
that swapped over to you.
Oh, hey, everybody. Good morning. Average Crypto Joe, Melissa, Alexandra G. Thank you all for joining. Anybody else? Logic Mindset, Mooks XC, and Darren Does Things, and Randy and Kyle Fields. Good morning. All right, guys. So we're over here taking a look at the total two, which is the entire altcoin market cap, including Ethereum. We can see that we did get very overextended here, came up to our retracement at the golden pocket, and then ever since we've kind of slid to the downside. Now we did come back down to test this previous area of consolidation, got a nice bounce off of that level, and now we are just sitting here underneath the market or the dynamic reactor right here. If we can get a break above that, then we could see a move up and a break of this downwards trend and get up to the 1.06 trillion dollar mark for the altcoin market. There is where I would expect to see some resistance, and then we could see a pullback on our altcoins. However, if you notice, the direction is up and then I pull back, possibly slipping back down here to kind of tap that high right there. So, yeah, maybe. And then we would just need to see get the work in here. But it could be a slow, drawn out process for now as Bitcoin takes center stage. We've got our Bitcoin dominance still sitting pretty high, 57.5%. But it is kind of breaking down a little bit. But it's broken down a few times before, only to consolidate and then break higher, which ultimately I do think is going to be what happens. I do think that our altcoins are still going to kind of lag until we see everything really start get going. But this little pullback right here, if we get this, what I'm looking for right here, if we get this pullback here, or maybe even a little deeper, create a little bit of an inverse head and shoulders in here, that would be super bullish. But at the same time, this right here, this move down would scare a lot of people. A lot of people. This, I think, would come after a Bitcoin all-time high, with Bitcoin doing a pullback, a slight pullback, and then altcoins following along with it, but they always get hit the hardest. Now, Ethereum, the world's largest altcoin, yeah, it is also, we're on the daily chart here. It is also sitting below its dynamic reactor and its quantum reactor. Go back to Bitcoin, we can see that it is sitting only below the quantum reactor. So Ethereum has some extra resistance levels that it's got to get through. Getting above this high is going to be key, but we can see that meets us right at our dynamic reactor. So that will be met with some resistance right there at about 2,800, kind of as we would expect. So would probably expect some kind of ABC pullback or something in here. Again, there's that pullback that we may see for the altcoins, while Bitcoin is getting its own little pullback at the same time. But that requires for all of them to kind of move up at the same time, which I am just not feeling for Bitcoin at the moment. But this is a daily chart. Let's go back. Oh, did not mean to do that. This is the daily chart. So let's go down to the 4-hour and see what we are looking at here for Ethereum. We have broken above both reactors. And yeah, so now I would be looking for a back test. But if we continue higher and we come up short of this high, at the same time, Bitcoin is breaking its high, because Bitcoin's basically got the same pattern going on right here. If ETH fails to break this high as Bitcoin is breaking its high, that is what we call an SMT divergence, where Ethereum, two highly correlated assets, diverge on major swing points. Well, I'm not going to count the bottom one, but that is a major swing point. But they diverge on major swing points where one creates a new high and the other one doesn't. That typically leads to both of them moving to the downside. There's also a bullish SMT divergence, which is just the opposite for the downside. So let's go to Bitcoin here. We can see, well, I don't know that we got an S&P divergence here on the low end. Let's go over here. If this is the same thing. So no, they both hit the same. They both created a low and then a higher low. So that is what we want to see, guys. We want to see lows. We want to see higher lows and higher highs. But if ETH fails to get above, as Bitcoin is breaking above at the same time, then you would likely see Ethereum getting into that order block right there and failing to get into it. And then we see a pullback. Now, where we pull back to, well, would be looking at the dynamic reactor and possibly the quantum reactors. So coming up, that might give us some short-term support. And then we come down to the quantum reactor, and then we can get going, which this would set up a nice cup and handle by possibly a nice cup and handle in here. But you can see that that's a whole nother drag out, and we don't get moving until the middle of October, which has kind of been my thesis. Is we're still going to stay a little bit sideways and stagnant. We will see some alts starting to get moving. We have seen AI starting to get moving, but this next pullback is going to be one that I think hurts a lot of people. We get a flush, and of the market and of leveraged positions, and that's just what happens. And sometimes I can push even lower than we want it to because of the cascading effect. So we are at range highs. It is always good to start thinking that about the possibility that we might not break them, or if we do, that they could be fake outs. So these are times when we need to be extra cautious, is when we are approaching those highs on these assets. Once we break them and we pull back and we consolidate on top of them and keep going, then we can consider, okay, that we have now changed up our market structure, and we are now looking for that next pullback. But then we aren't expecting it to go any lower. That would signal to us that the bottom is in, and that this is a pullback worth longing from. So that's what I got for now. What do you got, PC?
Well, I've got my favorite asset pulled up. That would be Injective. We have finally broken through a long-term resistance line that was trending to the downside. So I was not really expecting it to break so soon. I was expecting kind of a consolidation in this range where we had high resistance back here at the $10 mark, and kind of seeing a little bit of a squeeze, but we broke through early. So I'm kind of looking at how we didn't take these highs from over here, and we're now seeing some curvature on the Prime Oscillator Pro. This is on the daily. We are seeing some signals of outflows coming in. You do still see the MACD that is pointed up. If you come to a 4-hour chart, though, you are seeing the MACD almost set for a crossover on the upside of things. You are still seeing heavy inflows, and you've got a top signal and an overbought signal. So I am looking at it possibly coming back down to this trend line for a little touch to confirm that this is now support. This range would be around the $19.50 to, on the bottom side, the $18.67, because there is a line back here that we've bounced off of several times. It's a nice little support area that we could find strength at. You are seeing on the 1 hour chart, we are pointing down. You've got bearish divergences that are finally starting to play out. You are seeing outflows as the prime oscillator has started to lighten up and is now looking more red. So a pullback is very, very likely on Injective. I know I'm ready for it. I want to throw a little more money at it for a DCA. So give me those nice prices right around my average, and I'll be throwing more money in. I will toss that back over to you. I know we've got 9 minutes left of which to go over assets.
Lots of time.
Oh, yeah.
Lots of time. All right. Yeah, I've just got Link pulled up here. We can see, Link had a very interesting bear market where it did basically nothing. It went sideways, but this would have been a trader's paradise. Just shorting the highs and longing the lows. Could have made a crap ton of money on that. But I digress. We broke out of that range and then we came all the way back down. What was this? This was nothing more than a bear market retracement. Typically, when we get these bear market retracements, that means we still have quite a bit more time to go, basically. You won't typically see something like this. You won't see a straight line to the upside. But right now, what we need to do with Link is we've broken this current downtrend right here. So what I am looking for is, since I am expecting a pullback on everything else, is I would expect for it to meet resistance at the dynamic reactor, and then and then get the pullback with everything else back to around $10.40, and then that would be a good time to go long. Now, financial advice, in my opinion. And then we have this next resistance level here that we would then have to get through. It would meet us at about, well, we do have this high over here, so I'd want to get that high taken out at 14.87, get above that, and really $15, we'll call it. If we can get a daily close above that $15, then yeah, we can start looking at these steps up. We want to see sideways, shallow consolidation on these moves. We don't want to see big pullbacks. And this is on any of these assets, especially Bitcoin. But we don't really want to see a sharp move to the downside like this, because that would just suggest we're only going to come back up to come back down. Instead, what we want to see is just the move up like this with some kind of sideways consolidation, maybe a slight bull flag where we do come down a little bit, but it's still not, coming too far down. Too far down would be like pretty much anything past the 50% retracement. I want to see strong movements, bounces off of the 382 or the 0.5 retracements, because that tells me that we are very impulsive, especially if we get a big move up, consolidate, big move up, consolidate, big move up. There we go. So kind of just taking its time to get up there. This is kind of pointing this out, but this is there's a lot of assets, a lot of alts that look like this Link chart. So that's why I'm kind of pointing it out, and that I think that this is what we can get up to. But this gets us late into 2025, and if Bitcoin is above 100K and we're reaching peak euphoria as we're coming up here to these retracements, then Link may not, and may be one of those assets that does not set a new all-time high this cycle. I still am in the camp that a lot of these alts put in their all-time highs, and they are only doing bear market retracements, their own bear market retracements, because they are separate from Bitcoin. Maybe they are separate from Bitcoin more now than they have ever been because of the ETFs. And because of that, they could be having their own little cycles inside of the Bitcoin cycles. And we did see this in the last bull run, actually, when we saw stuff that it's in the top 10, not breaking all-time highs, like XRP. So, and I see a lot of stuff like this. I think AVAX might be one of those too, where it's come back down to its bear market lows. Yep, come back down to its bear market lows right there. And then we get to move up, and then we'll see if it can create a new all-time high. I just don't know if it can. But what this kind of signals to me is that this is more of an ABC correction within a bear market, and then we'll just see further correcting to the downside. Maybe not that low, maybe just a little bit of waddling around in here, and then by the time we get into 2028, we get to moving again. So point of that is you still have time, my friends. You still have time. Just stack sats, stack whatever one of your favorite coins, and that's not a meme coin, and we'll play it out. We'll see. We got time. We got 3 minutes though. So
Did you describe price movement as waddling around?
yeah,
That's awesome. I love it.
waddles. It's just waddling around. Some people say waffling. I say waddling. There's a lot of waddling here in the South. Okay, you gotta walk. Waddling. All right.
All right. I mean, that's if they can walk and they aren't on that electric scooter.
Oh, I thought you were gonna say something else, but never mind.
No, I'm being polite.
They're not on that meth.
Yeah, there's that too. Oh.
It is the South, so.
Oh yeah. I mean,
you want to bring yourself up?
Yep. I was gonna pull up not real quick though. I see St. Clair asked not, and I'm assuming he's asking for the asset not, but if not, then oh well, I'm gonna look at it anyway. It is a fairly new asset. I just pulled from the beginning to the high, and we have found some strength at the 786, which is your platinum pocket. I don't know how much strength we're gonna see, as it is not a real utility token. It is a token that is the opposite of TON. I know the TON network is very strong, but
isn't it not a meme on TON?
Yes.
Okay.
You do see kind of getting here on a daily chart where you could see some topping indicators. You are seeing divergences on the daily chart. So that 786 could be a triple bottoming point for a move up. That's just kind of what I'll go over, because it's kind of hard to do any TA on something that's only been around since May of last year. There's I can't really do a whole lot of a TA on it when we've made a high. You can do some, but that's about it. There's the high to the low to the high, and here's the 786. That's sitting at the 2 zeros and a 7-1. So kind of a point where we could bounce off of. So that's all I'll go over on TON. I will toss that over to our dual screen so we can talk the people out.
Yeah, just remember, guys, the name of the game is to be careful and to protect your capital. So make sure that you use your stop loss and never let it go. Never turn it off. Do not get rid of your stop loss. If you go into a trade, always go into a trade with a plan and stick to that plan. Regardless, over time, if you play the same setups that you're used to, or if you get really good at identifying just one setup, the best thing that you can do is play that out over hundreds of times. Literally, it'll become boring. It'll become monotonous. But if you protect your capital, you set your stop losses, over time, you will be profitable. That's all that I got on that. Yeah. So I hope you all have an amazing, beautiful, wonderful, radical day. Ride the waves, baby. Let's go.
Thank you for tuning in today. Make sure to check out Piper later at 9:30 9:30 for the morning market open report, and tonight at 8:30 Eastern with PM. Since you always make sure to remind me, it is 8:30 p.m. for the nightcap with Tradefly and FD White. If you are not subscribed, please give us a subscribe. Hit that like button on the way out. If you haven't already hit that like button, make sure to check out all our links in the description. If you need any indicators or some coffee, we like our caffeine around here. Also join the Piper Academy Discord and the Lunar Beaches Discord as well. Other than that,
One more thing. Billy Goat Tales tonight. They have Jenna X on, so make sure you go over on x.com and go to Billy. Excuse me. Go to Billy Goat Tales, and it is at 9 p.m. Eastern Standard Time. And that's gonna be it.
All right. Well, everyone trade safe today, and wake up.
It's gonna be a good day.